So Preneurs, one of the enemies to your wealth is the IRS. But the real question is, do you know how to keep them out your pockets? Today we're going to talk about it. Let's get right into it. Welcome back, Preneurs. Today's conversation is going to be able to help you. Maybe you're an employee, maybe you are an entrepreneur, maybe you're a business owner, maybe you're a leader. But one thing is, I promise you that everybody wants to know is how to keep the IRS out of their pockets. Why? Because that is an enemy to your wealth. So let's talk about it. You right now could be being taxed right now, which means today. You could be taxed as well tomorrow, which is more deferred, which is at a later time. Or the IRS can be coming for you never. Which one would you prefer? Obviously, never. They just never talk about it. So today's conversation is about the 3 different ways you could be taxed, how you can position yourself to keep the IRS again out your pockets effectively. So if you are right now in the first, I guess you would say, box right here of tax today, that probably means because you are in one of these classified positions. Like what? 1099. Okay, so maybe you are self-employed. Maybe you are currently selling something. Maybe you're getting some type of dividend at the end of the year, or maybe you are listed on as a contractor, independent contractor. You are listed as a 1099. So if you're getting a 1099 at the end of the year, the IRS is saying, hey, pay me, right? Pay me now, right? So that's exactly what happened. Next is CDs. Maybe you go to a bank right now and you say, you know what, I would like to put my money into an account for a little bit of time. They give you so much about an interest. It's agreed on for a certain amount of time. Again, you will be taxed today. Next is checking accounts. All right, before it goes into the checking account, they are taxing that money. How about savings? Before it goes into the savings account, they are taxing that money. How about dividends? Maybe you have some stock in, I don't know, maybe AT&T, maybe Tesla, maybe Amazon, and the quarterly reports look good, you get a dividend from that as well. You will get a 1099 for that. All right, and you will have to pay taxes on that profitability that you did receive, because that is taxable income. That means the IRS is coming for your pockets when? Today. All right, that's exactly how it looks. Another one is that you can position yourself as using the second strategy, which would be more of a tax tomorrow. Why would you want tax tomorrow? Because maybe you say, you know what, IRS, I don't want you in my pocket today right when I get my money, right? I want you to kind of delay that. Let me actually touch my money for a little bit longer and see if I can grow it for some more time before you actually come after it. So you might use these type of accounts. You might use an IRA. IRA is an individual retirement account, all right? Maybe you're using maybe a 403B. Why would you be in a 403B situation? Because maybe you are in the education system. Like for example, my mother was in the education system. She's been a teacher for over 30 years. She used a 403B, right? Maybe you're more of a public servant. Maybe you're a police officer, or maybe you're a firefighter, right? So then you're using a 457. Maybe you're an employee, right? So you have an employer that's offering you maybe a 401k, right? We call it the alphabet retirement accounts. They all work the same way, just depends again on what industry that you're in. Maybe you're using a TSP because maybe you're in the military, all right? Maybe you're using a TSA, which is a tax shelter annuity. Maybe you're using a simple IRA because you're a business owner, right? An individual retirement account is a simple way of doing it, or even using a SEP, right? For different ways of tax advantages. Okay. And by the way, just so that we're clear, I am not a CPA or a tax advisor. All right. So here you go. So when you look at this, you would use these accounts because you are deferring, you're delaying the IRS to come and what? Touch your money. Right. And now you might say, you know what? Well, if I don't want them to touch it today, or not even tomorrow or a later time, how can I position them to tax? Never. Right. Well, there's a couple different ways, but if you look at municipal bonds, that is the one way you can do it. Another way you can do it is using a Roth IRA, all right? And then another way you can do it is using this tax code, okay? Using the tax code that the IRS has put in place for those that are, again, know about it to be in the tax never situation. And that's tax code 7702, which is a revenue code that states that any money under the umbrella of a insurance policy cannot be taxed by the IRS. Now, this is a very big deal for those that, again, want to be in this tax bucket. If you do not know about it, make sure you meet with someone that knows about this third bucket. Why? Because you can be spending money, unfortunately, when you don't really have to, right? You can be in a position right now where you have the IRS putting a little too much hand into your pocket, take a little too much out of it when they don't really have to do that in the first place. If you know about, again, this way of accumulation, which is getting out of that tax situation. So for you, maybe you're saying right now, I want to position myself to a whole different level. Hopefully this video was able to help you. Make sure that, again, that you go and tag another entrepreneur, another leader, or someone that says, you know what? for this year, I want to kind of remove that enemy of that wealth and actually keep more of my money for myself by using other different accounts and being diversified as well. So with that, let's make sure you're increasing 1% on a daily basis so we can help you increase your profit, your passion, your purpose, and we'll see you guys in the next video.